and how to perhaps think differently about it. And hopefully, what I'll do today is give you some ideas, inspire you to take your business forward, um, and you come away with some tools to do so from this engagement. Let me just see to admit someone here. All right. Okay. Apologies for that. Okay. All right. Okay. So yeah. So the let me just then go to the next slide. Hopefully you can all see the screen. Just trying to maneuver, also letting people in. So apologies for that. All right. So just on myself, I'm a chartered accountant, as Mr. Lewis said. I have about 30 years experience post articles. I grew up in a small town in the Western Cape in South Africa. I've held positions both in the development finance space, and I think perhaps a lot of you can relate to the DFIs because on the African continent, a lot of the funding also comes through DFIs and impact funds and so on. So I have spent half of my career, in terms of my corporate career, in the development finance space. I started with the Industrial Development Corporation and eventually became the chief investment officer of a platform called the National Empowerment Fund that had sort of a dual mandate. One, focusing on SMEs, providing um, startup capital to SMEs that are indigenous or black owned, and also providing funding for entrepreneurs to buy into existing businesses, so the sort of the acquisitions and so on. So I ran that fund. I was chief investment officer for about 4 years. And then on the commercial side, I also spent some time in investment banking. I was an executive for a company called African Merchant Bank, where we did a lot of privatization, corporate finance type work. I also spent time with Actors as a private equity deal maker. Actors obviously is a leading investor on the continent now, specifically focusing on infrastructure. And then also my last role before I ventured into entrepreneurship was with a company called Kagiso Tisa Holdings, that is one of the largest Black-owned investment holding companies. I was the CFO for about 6 years, focusing both on the managing a finance team, but also on deal doing, raising capital. And I raised about 2 billion rand for the company. Also did some deals with them, sat on some boards, and so on and so forth. For the last couple of years, I've been, doing consulting, and also more recently, the last year or so, business coaching. So I've done strategy work, capital raising, and then also now focusing a lot on entrepreneurship development and coaching. I've written two books. The latest one being The Growth Illusion, that a lot of the ideas that I will be sharing today comes from there. And then my first book is called Wisdom That Builds, and this shares a little bit about my own journey, where I grew up, corporate successes, and then also my perspective on the need for coaching in business, some key aspects of business building, and that's wisdom that builds. And the idea is that, through wisdom, yeah, as the scripture says, wisdom is a defense as money is a defense. So that's where I get the title there. So yeah, so that's me. If I then go forward on the next page, okay, I think, all right, let me see. I don't know why it doesn't, it seems to get stuck. All right. Apologies for that. It sounds like I might have to um, get in and out of the presentation just to keep it at maximum visibility. All right, so yeah, what I've got, ladies and gentlemen, is that I've got just a brief summary of the Zambian economy, as obviously this presentation was initially um, for the Lusaka dirham. And of course, I'm not an expert on the Zambian economy, but just to position our discussion, Zambia is the 19th largest economy on the African continent. It's about $40 billion in GDP. I think about 1.8 $1,800 GDP per capita, if my memory serves me correctly. And it's gone through this debt recovery since, or debt restructure since 2020. And I think more recently, the IMF, there was some facility with the restructure. So that's kind of a macro picture. The economy is obviously, there's some primary sectors like mining, which is the copper, and in cobalt, and then also agriculture is a key sector, and then also industrials like cement production and also fertilizers, if I understand it correctly. So that's kind of a broad picture. And then Lusaka, where this conference was going to be, uh, has about 25% of the GDP. So it's a key sector or key part of the country, key part of the of the economic landscape, much I would suggest like Gauteng in Johannesburg, in South Africa. But the opportunity set obviously is the fact that you can develop a business. Mr. Lewis spoke about private equity. And in my private equity, in my corporate days, whatever, I also managed a number of private equity funds. So I was the head of corporate finance with DBSA, and what that meant was Development Bank of Southern Africa. And what that meant was that we invested in a number of private equity funds. Why do I mention that? Is that because one of the key things I think for an economy that perhaps is not the largest economy on the continent or globally, but what opportunity you do have is a regional opportunity. And that's what I've seen also when we were investing in some other Africa-focused funds, is that the best investments were typically those that had a strong home base, but also, you had the opportunity to then have, let's say, your home base or um, you have a strong domestic leadership, but then also you can actually expand through other regions. And without rambling too much, what I'm trying to say is that the opportunity, as I see it in Zambia, is the fact that you can become a regional player as well because you border 8 countries. Then the next slide talks just really about what I'm trying to do with this slide here is also just position the rest of the ideas that I will be sharing with you today. And that is that the economy of Zambia, there's 1.5 million small and medium enterprises, and 95% of it is informal. And it's not that dissimilar from South Africa. In South Africa, more than 90% of the companies also are small. And my question today with this presentation is, how do we transform our businesses um, to become these global champions? I mean, Mr. Lewis is talking about his business having different subsidiaries and different companies, and I can see the makings of an African and perhaps even a global champion in what he's talking about. Now, one of the challenges that we find in Zambia, as in many of the other economies on the continent, is that businesses are found independent. So they remain small. They're also challenged with access to finance. And one of the things that you find when you engage with SMEs is people all typically tell you that they have a challenge with funding. They can't find finance. And when I was at the NEF, also, often people would say, and they would have these studies about how access to finance is the problem. But what I found is actually there are other challenges that determines or that has an impact on the ability of many small businesses to find that finance. And some of these are highlighted here. Financial reporting is a challenge. The finances are not, the numbers are not properly reported. The entrepreneur doesn't know cash flow from profit. Um, Systems and processes are not in place, so it's difficult for a funder to look into the business and with confidence because there's no systems and process. Everything is dependent on the founder, and then of course access to markets. You have many of these economies, a number of large players, and so your smaller players then have this challenge of how do they compete. So without dwelling too much further on this slide, that's what I wanted to make, the point I wanted to make here. Now, this one here is where I'm getting into the meat of what I wanted to talk to you about today, which is to say that, with regards to, I'll just put it there for a moment, with regards to this makeup of companies, um, 80 to 90% of it, this is on the African continent, so this is not strictly to do with Zambia. Um, and 80% of the businesses are micro businesses. A lot of the businesses are informal, and then 7 to 15% is what is called small. If I look at South Africa, for example, if my memory serves me correctly, about 95% of businesses, um, thereabouts, 90%, let's call it, has revenues below 5 million rand. So that's what about 200,000, let's call it $300,000. That's the bulk of businesses in South Africa. And I think it's a good metric to then also use for the continent. Very few businesses is what is called medium size. So here we're talking about businesses that, let's say, have revenues above $1 million, and 50 to 250 employees. So, and then of course you have the large enterprises, which is less than 1%. So the question I have on this slide is, there's nothing wrong with a small business, lifestyle business. That's not my point today. We all are looking to build our businesses. So I'm not saying that there's anything wrong with having a small business, or even a micro business. The question I'm asking is that what prevents businesses from making the leap? Why don't we have more medium-sized and large companies? So the challenge is not starting a business. A lot of discussion, even in South Africa, for example, is on entrepreneurship development and so on. But my hypothesis in this presentation and in my book, The Growth Illusion, is that not enough focus is placed on how do you graduate, so to speak, from being a small business to becoming a medium-sized company that can actually become a global African and global champion. So yeah, so so what I want to do with this slide here is to talk about what I'm sure you've heard before, which is the difference between a lifestyle business and a transferable asset. A lifestyle business and a transferable asset. Now, again, there's nothing wrong with having a lifestyle business, whether it's a business, let's say a services business that's built around yourself, and it meets your needs. But then also a lifestyle business is going to has some limitations. Now let's talk about those things. So I've got a lifestyle business designed to fund your day-to-day life and gives you freedom. And it could be in any industry. It could be services, like I say, maybe a restaurant, something like that. But it could also be a consulting business or a services business in a different way, where it still depends on you. Your time drives the income. Freedom comes from flexibility, but not from scale. So the idea is, how do I scale this business? Um, so on the opposite side, and what I'll show today in this presentation with a couple of case studies, are entrepreneurs who started their businesses, much like we have started small businesses, but they have somehow um, cracked this secret, if you want to call it, to take their small business to a larger business and then to a local champion, in some cases even a global champion. So what did they do, and how can we copy what they've done? So what a transferable asset will do is that it actually will allow you to sell your business uh, or get dividends or attract more investors. And some of the key differences, I'm not going to go through all of them, but I'll go through two. The one is just around the role of the founder. And the key difference is that the lifestyle business is founder centric. Everything revolves around you as the founder. Whereas ultimately, it'll go through the phases of development. The transferable asset, you get to you move from through different roles and ultimately become more of a guardian or steward. And some of the key benefits there is, of course, being able to get value out of your hard work. So you've worked on this business for a number of years, and now you are able to sell it. What we've seen throughout the world is many people spend their whole lives in their business, but they can't sell it, right? And part of one of the key things there is, have you built a business that can survive and thrive without you, or do you need to be in that business for it to actually function? So as I said, neither part is automatically wrong. The question is, what are you building? And as I speak to you today, I'd like you to think about where are you on your journey and what are you building? If it's a lifestyle business and that's all you want, there's nothing wrong with that. But if you've got higher ambitions, well, how do you get there? The other challenge is also being in the middle. Not sure whether you're building a lifestyle business or whether you're building something else. um, so if you don't make a conscious decision, you're not going to get where you want to. As the saying goes, if you don't know where you're going, any road will get you there. So you got to make a choice. What am I? Where do I want to go? And if I want to go there, what am I prepared to make the sacrifices? So one my hypothesis, my key idea, which I share in my book, The Growth Illusion, is that these businesses that eventually become these global, local, or let's say regional champions first, maybe in your province or regional state, and then they go from regional champion to national champion, and then eventually from national champion um, to a global champion. I mean, just to give you one example as I go through this before I get to my other examples, is a company like Investec Bank in South Africa. I mean, they started out as a small leasing company. I talk about them in my first book, Wisdom That Builds. And they started a small leasing company, eventually became a fully fledged bank, added other services, and now they essentially have presence in a number of other countries, including the UK. So that's an example of a business started within our lifetimes that's become a colossus. And I can go on with other examples. Now, what do these entrepreneurs do, or teams of entrepreneurs do? Because sometimes it's not only one founder, but maybe a group of founders. But the key thing is to go through some of these stages. Now, the first stage where we all start is being the doer. I mean, you're in your business, you have many different hats. Maybe you do the marketing, you do the sales, you're involved with clients, you're involved or maybe also in the finances, raising capital, whatever. So the whole business revolves around you. Maybe at some point there's one or two people coming into the business. So that's the phase one, for the founder-centric momentum, and I'll come back to that in an example that I'll show you later. The next phase, which I think we all need to get to, or we all are on our way to get to, is to design systems around you, to recruit the right people, to develop them, to encourage them, to empower them, and to build systems around you. And then ultimately, some of the other examples of companies that eventually attract private equity capital, institutional capital, able to sell part of their businesses, or all of their businesses, is what I call the steward phase. And this is where you then involve other experts beyond yourself, that can actually add value to your business. Now, one of the key things, the key points I make in the book as well, is that for you to go through these different stages, there are key mindset shifts that that we all need to go through as entrepreneurs. And that talks about, so it's not only about systems and processes, it's also mental. The first one I would say in the middle there is, as I mentioned before, is to be clear on your ambition. If the idea is that you want to build a lifestyle business around yourself, maybe one or two other people in your business, there's nothing wrong with that. As long as that's what you want, and then you maybe can introduce technology to scale in some way and enhance your profitability, and that's all good and well. But if you're not clear and you haven't got a clear kind of true north where you want to go, you're going to be muddled, right? So you got to be clear on what type of business you want to build strategically. So that's my point is the first one. And the second one, which I've seen in some of the companies I've consulted to, um, I've also worked on one sort of medium-sized founder-led company, which I reference a little bit anonymously in the book as well. And that is a company that has already done well. They've already got they've got a balance sheet, they've got investments, they've got assets. But the challenge is the founder hasn't mentally shifted. So what you then end up doing is you have one or two people that you trust, and you are scared of new people coming in from the outside. And the problem with that is you don't get the best talent, and everything revolves around you. And unfortunately, in that situation that I'm referencing, things didn't turn out so well because the founder ends up with all the stress on himself, right? So what I'm saying is that this whole point about founder centrality is not necessarily for a startup or early stage business. You can even have a fairly large business, medium-sized company already. But for you to kick on to the next phase, to the steward phase, where you're now really having a business where you kind of more the visionary and the chairman role, in terms of the business operating profitably. But you're not in every meeting, you're not chairing every meeting, you're not having to sign off every decision and all of that, and you become the bottleneck. And so for that to happen, a key thing is around being able to get other people around you. The whole point, as I mentioned, about institutional, um, mine's got stuck now again. All right, so embracing systems and the likes. All right, so yeah, I've got just a simplified schematic of some of the ideas I share in my book in a bit more detail. What I'm saying is that there are, let's call it 5 building blocks to building this business, which will give you this transferable asset. And I'll show you what the benefits are later on. But for now, let me just go through this. So the first thing, which I've already alluded on is leadership capacity. And I'm not going to go through every point, but the business can only grow as much as the leader, right? I think John Maxwell famously said, everything rises and falls on leadership. And so one of the things that the
Wow.
founder has to overcome, you know,
Bwino wakabwanje.
please mute, please mute,
Antena wakatabe bwino kaya imo kumakabwa.
please mute. All right. So one of the things that the founder have to overcome is this. Remember, I spoke about going from the doer to the architect, where you build the business more on systems and people, and the steward, where perhaps you're having a less executive role, is to overcome this thing called the founder's trap, right? So the founder's trap is really the fact that everything revolves around the founder. And then also the other thing that I would suggest is that leading with courage, because as the business grows, one of the challenges that I've seen in my consulting practice as well, is this tug of war between loyalty and competence, right? So you start with some people that helped you initially get your business off the ground, but as the business scales or grows and scales, perhaps you need the people that you have on the bus are not the right people anymore. And if you have this loyalty bias, right, you will not be able to get the outcomes, because now your decisions are based on loyalty as opposed to who's the best for the job. So I'll leave it at that. So on the leadership bucket, that's the one thing. The second one is, and I'll talk a little bit more about this one, is having a winning strategy. Now, we all know about, vision and mission and all of those types of things, but I've come up with about 5 or 6 points, which I think is important when we talk about strategy. To be clear on what you're building and how you differentiate your business from the competition, right? So you have to have a clear strategy, and obviously that needs to adapt. The third one is around talent, depth, and accountability. So we have to acquire the right people, have them in the right positions, and also develop the people. And this is again where coaching, leadership coaching, can be very important. So, in my view, coaching is not only about, as it's often perceived, being remedial, or it's about soft issues. In my view, coaching should be, these are the strategic goals of the business. These are the people that I have. And sometimes, to balance the point I made earlier, we also recruit based on people's attitude, on their behavior, and not necessarily only on the skills, because the skills you can develop the skills, right? You can develop technical skills, but if the person has the right behavioral competencies, and maybe you want to retain this person, but you need to now develop them, because they need to take on greater responsibility. So you can have coaching aligned to the strategic goals of the business, and therefore develop your team. Now, talent without the right talent and also right incentives. And again, here, I'll throw out this perhaps as a challenge for entrepreneurs on the platform, is that what I've also seen in practice is that some businesses have this vision, this perspective of sharing wealth, right? So your entrepreneurial business, you building, and now you're getting some very good people. You're gonna work with them. You're gonna help them develop, and they're gonna build your business. But if you're the only person that's becoming wealthy in the business, you're going to have this revolving door, and you're gonna have animosity. So you need to have then systems that essentially aligns the behavior of the people with the outcomes that you have, whether it's bonuses, whether it's share incentives, whether it's market-related compensation, and whatever the case might be. And then the next one I would suggest um, is around finance and capital. So I'll make 2 points. The one is raising the right capital at the right time. Often entrepreneurs say, I need money, I need capital. I can't tell you how many people have approached me with, kind of 1 or 2 pages. The guy wants to raise R1 billion on this two-pager, and that's obviously not realistic. No funder is gonna back you there. And also, you don't have equity in your. There's no equity. It's going to be pure debt funding, which is not realistic either. So you got to raise the right funding at the right time. Then you need financial management discipline. Um, and again, in my NEF days, I've seen that a lot. We for example, had um, a whole team of people that help small businesses actually get their finances in place. But the point I also make in the book is that the accounting systems that you're going to have as a small business, you're going to have to migrate them or graduate them as you grow. And again, I've seen that in business. The guy starts off, he's got a, like very basic accounting system. And now the business becomes big and you don't know your balance sheet, you don't know your key metrics because you've got all these disjointed reports and you yourself don't know where you're going. And now the funder has to back that. So those might be boring stuff, but it's really needed. And then I would call it execution and governance. And yeah, I'm talking about execution discipline, having proper meetings. I've been in situations where people have meetings and, it's an hour into the meeting and then, Mr. Chair, on a point of order. If you run your business like that, you're unlikely to be very successful. So your meetings has to be kind of really pointed, outcomes based, accountability for people, clearly documented systems and processes, not bureaucracy, but also enough processes that can help everyone understand what's required, what are the KPIs, and also delegate properly. And then as your business grows, you think about things like bringing on people maybe on a small board, coming onto your board that has the right skills. So that's that. Let me just see. I'm going to go into the next slide. Uh, okay. All right. I will stop for questions in a few minutes. So this is, I'm going to go through this bit quicker. So this is just, some aspects that I've got under building what I call a winning strategy. You may have others. Uh, this might, be slightly different from what you've seen before. But what I'm saying are fundamentally, for you to build this medium-sized company and also then maybe a global champion or even growing your small business where you are now, you need to understand the market reality. Who's in the market, where do you play, what is the competitive dynamics, and then build internal capacity. What is the capacity that I need, the people, the systems, and so on. Then the third one, which I'll demonstrate through a case study, through two case studies, is target a valuable market, right? So if the market is small and saturated, right, how do you make a difference? So, for example, we have a company here in South Africa, which you may have heard of, a business called Capitec, right? So they started about, I think, 30 years back, also as I think, a small kind of loans business. And they targeting a market which one could say, look, it's saturated already. But somehow they innovated, and therefore they target a large market, what they call a red ocean market. In other words, it's not a new market, but they were able to compete in this red ocean market by differentiating. So you got to think about, is the market big enough? Can I play in the market? And then four, define a clear value proposition. Why do people buy from you? Five, have a scalable business model. I'll talk a little bit about business model. And then the sixth one is, in my view, is also very important. It's to act on high impact strategic decisions. And that strategic decision could be hiring a key resource, whether it's an executive, it could be or finance manager or whatever that can take your business forward, that can pivot your business, right? It could be entering into a new strategic partnership, right? So you've got your business, you need to then reach the market in some way, in a different way. You want to expand to a different market. So which partner you're going to go with might be a big inflection point in the business. It could be an acquisition you acquire, but it could be raising capital. So you gotta recognize the moment, the inflection point, as they say, and then act on it, and that can take your business forward um, to the next level. All right. No, lost this. Okay. All right, so now I'm close to landing this presentation. I just want to then share this story with you, which I found quite inspirational, and I hope you found it as well. So this is a company that was started in the year 2000 by a guy called Stephen Gleisner. So Stephen Gleisner, he was unemployed, and he was living in someone's backyard. And pardon me, so they asked him to do a delivery for like 20 Rand. And then he then did the delivery, and they called him the courier guy, and that was the start of his business. And so he had 2,000 Rand, and he started his business with 2,000 Rand. Let's call it $150. And then he did everything. He had this motorbike. He went and yeah, and did these deliveries. Now the other thing is also, remember I said, you must target a valuable market. You must understand the market reality. Now what happened for him is that the South African, let me call it logistics industry, is obviously a big opportunity, but also with these smaller parcels and so on, the challenge was that, the South African post office also had gone through a lot of difficulties, and other companies also, saw opportunity because of the poor delivery from, let's call it, the post office. I'm not saying that's the only reason why this business succeeded, but he saw an opportunity, and then he started, growing the business. He also involved an owner-driver model. So in other words, leveraging remember I said strategic decisions, right? Leveraging his capital, which he had limited capital for. So, he could partner with other people who could buy their own vehicles, and then obviously get money for delivering the parcels. And then he built systems and processes. And then going from, kind of regional to national, he had this Pudo development with hundreds of kiosks and warehouses, and then professional management, and he became more of the manager, or the CEO, as opposed to the doer that now has other executives, and eventually sold his business to a company called Andina Private Equity for hundreds of millions of rands, and stepped away from it. So this just shows you a practical example. A guy built a business in about 20 years from $150 to millions of rands. I think millions of dollars. Yeah, tens of millions of dollars as well. So the key drivers, clear on ambition, clear on what you're building. As I said before, systems. I'm not going to go through all of the other stuff. I've already spoken about it. The key thing there is optionality. If you want to build, you stay small. There's nothing wrong with that. But if you are ambitious, as we've heard pardon me, Mr. Lewis talked about his ambitions, you got to be clear on what you're building. And then this gives you optionality because, once you have the wealth, you can obviously, you can use the wealth in a number of different ways, and, impact your society for good. Yeah, we got another example. Remember, I said one of the key aspects of a winning strategy is the business model. Now, the business model is really, every business has a business model. Even if you don't think consciously about your business model, every business has a business model. So it's really, the business model is really how the business functions. It's like the engine of the business. It is how you, create value, how you deliver value, and how you capture value in rands and cents. Now, here's another company, another entrepreneur. I think this business is also about 20 years, 25 years old. This man was as a school teacher, and he saw an opportunity to start a private school. In South Africa, what we had was, a lot of public schools, and the public school system has also not delivered the outcomes that parents wanted. But then you also have the private schools that are very expensive, these kind of elite private schools. And what Kiro has done is found a niche where the LSMs, or income levels, are not necessarily the wealthiest, but but these are middle-class people that can afford the fees of Kuro. And so it solved the real market problem. It's understood the market, solved a large market, as I said, solved a real problem. And also what it has a repeated operating model. So it's got a combination of physical schools, standard curriculum. It's got high quality teachers. Its schools are the same, everywhere more or less. Its operating model is the same. Then scalable economics. A lot of yourselves might be very familiar with infrastructure projects on the continent. Now, the challenge with a company like this is that you can overspec and overspend on the building. Now, what they've done very well is control their cost, and they also only rolled out new schools as they had students. So therefore, making sure the economics work. And then the very robust model, obviously recurring revenue through school fees, tiered school formats. Not every format is the same. And then once your cost, so high operating leverage, meaning that there's a fixed cost, and once the fixed costs are covered, you just have profits. And that's basically their model. And then, of course, they also partnered with, institutions like PSG, is a company that created a lot of wealth, an asset management business. And Curo basically got funding from this crowd called PSG. And then, so about a year back, well, the company became a public company, listed on JSE from a startup, and eventually, was bought back by PSG for a number of billion, I think 7 billion rand. So it can be done, is my point. I'm not saying every business should be a Curo or a courier guide. That's not my point. My point is that these are two businesses that were built in about 20, let's call it 30 years from basically nothing. And we can see the same 6 or 7 elements that I've spoken about before that are also here prevalent in these companies. And hopefully that gives us also pointers in terms of what we can do to take our businesses forward. So now, ladies and gentlemen, as I land this presentation, I want to ask you the question, would someone want to buy your business, right? Would someone if you look at yourself, your business today, and you say to yourself, I've built a business, or I'm building a business. How am I doing in terms of getting capital? And if I wanted to step away and sell my business, would someone want to own my business? So you can build a business around yourself, or you can build a business. Okay, I'm just trying to get this. All right, there we go. Thanks. So you can build a business around yourself, and as I said, constant firefighting, and your business can already be, as I mentioned, medium sized, or it could still be small. It doesn't necessarily matter because it's really about those conscious decisions. Do you still continuously firefight? You got a high stress and burnout. You're also struggling with capital raising, and you think maybe it's to do with the funders don't like me. But have we turned around and said, look, is our business properly structured to give a funder confidence to actually come into this business? Am I struggling with staff turnover? I've seen this in practice, where you get good people coming into a company and then after a few months they leave. And the founder asks, what's happening? And you have this founder syndrome where everything revolves around the founder. And the best people are not going to keep up with that very long. Then you have, fragile growth, which I also talk about in my book, is you're growing, but, it's kind of sporadic, stop, start. You get one year you're doing okay, but you're not necessarily getting constant profits. You're not scaling, you're not consistent. Or you're building a business beyond yourself where you have a robust strategy. Remember, I spoke about those 6 elements of strategy. It's just a shorthand. Of course, strategic planning is much more involved than that, but I'm just saying those are 6 hot buttons. So, do you have a clear strategy, a clear business model? Have you evaluated your business model? And again, if you go onto the Growth Illusion page, I have diagnostics there, which you can access for free, that can help you ask a few questions about your own business. Then you can look at leadership team. Do you have the leadership team that can take your business forward? And do you align the incentives with them? How important is governance and reporting to you? I've seen some companies that are even listed companies, but they were kind of listed on a smaller board that are still finding loopholes in IFRS funding, IFRS reporting. No, 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 we don't want to have group reporting. We want to not consolidate our numbers. And I think all you're doing is just creating problems for yourself because if your reporting is first class, your governance is first class, it just gives confidence to investors. And then capital discipline, are your business properly geared? Is there enough equity? Does it generate cash flow is important. Because if your business doesn't generate cash flow, all that's going to happen is, and I've seen this as well, you can't pay dividends. So you're working in this business, you got some revenue, but there's no returns coming out because it doesn't generate cash flow. So you're dependent on this, on selling the business at some point because it doesn't generate enough cash flow, pardon me, for you to get a dividend out of it. So that's what you want to do. You want to build a business beyond yourself, and it's not a sprint. It's going to take some effort. So I think I've got 1 or 2 more slides left. Um, all right. So what I'm saying here is the benefits of building this transferable business. Like I say, there's nothing wrong with building a lifestyle asset if that's what you want. It does give you freedom. You've got a smaller team. You've got more of your, you don't have all this governance, headache, so to speak. But if you want to then have this ambition to build this champion, regional and global champion, the transferable business can give you a couple of benefits. One, you can continue to grow. You don't have to sell. You can build a business through many generations. You can expand into new markets. Remember, I spoke earlier about my days at DBSA. So some of those companies, they ended up, starting in one country and then having a footprint of a number of, countries on the continent. So you can expand into new markets and continue to grow. You're going to attract the best investors, right? Because your business is attractive. It's seen as a company that can provide the right return to the investors at the right risk profile. We'll talk about that in a moment. You can pass on your company to the next generation. In terms of obviously shareholding, but also, we have many family businesses on the continent that are very successful. In South Africa, I can think of a few family businesses that went on to the next generation that they even took it further. You have the option to sell when you want to and build if you continue to build. Now, if you build your business properly, then you will have optionality. You can engage with private equity firms. We saw with the example of the courier guy. You can engage with family offices. A lot of family offices have taken an interest in private equity in unlisted companies, whether it's old economy, new economy, consumer goods, whatever the case might be. Or you can engage with high net worth individuals for funding or other strategic partners, whether it's commercial partners or funding partners, of course, banks and DFIs. Then, as I land this presentation, I want to ask you to consider these 7 questions. You might say to me, Frenzel, you shared a lot of information. but what does it all mean? And what do I need to do next? So I will just leave you with these couple of questions. The one is, do you have a clear strategy for the next 3 years? Or are you simply reacting to opportunities? Often you find with small businesses that strategic planning is sort of, it's for these big corporates. I don't have time for it now. But unless you have a clear strategic plan that sets out where you're going, clear goals, objectives, a financial plan of some sorts, you kind of shooting in the dark. You're not quite sure where you're going. You can't track where you're going, and so there's no coherent, overarching plan. Then, are you clear about your business model? Have you looked at the different components of your business model? Then, with different tools that you can talk to, about the elements of a successful business plan, a business model, should I say? And how do you stack up against each of those elements? Leadership team, if you stepped away for 3 months, who would make the important decisions? Do you have succession? Do you have a strong team? It doesn't have to be a huge team. Your business can still be small, but maybe, you have a couple of people that you are grooming or developing that, can take the reins in your business. Are your systems supporting growth or people are working around it? Of course, today, there's a lot of focus on artificial intelligence, and I think we all need to embrace that, in my view, because that's where the world is going. So, do you embrace systems, technology, innovation in your business? Then I spoke about capital discipline. The key point I make there is your business generating enough cash to fund its own growth? Is your business generating enough cash to fund its own growth? A lot of entrepreneurs focus on on profitability or on profits, right? Profits are not the same thing as cash flow because your profits could be sitting in your working capital. So if you don't generate cash, what it means is that if you want to expand your business, you would then have to get a loan or you get some equity funding or something of that sort. If you so unless you generate cash, you cannot take your business forward. I've seen, as I said before, a situation which is actually sad, to be honest with you. An entrepreneur starting a business, the business is actually doing very well. Relatively speaking, it's no longer, just struggling. He has got substantial revenue, but the business is not generating any cash. So what this entrepreneur ends up doing being is a salaried, he's the founder, he's a shareholder, but he's a salaried employee effectively because there's no dividends coming out of the business. And the sad part is, if you wanted to sell that business, it's going to be a difficult sell because there's no consistent track record of profitability. So what are you building? You're spending 20, 30 years in this business. You can't confidently sell it or sell it at a good price, and you're not getting returns. So that's very important. Then governance and reporting, accounting and tax planning and all of those things shouldn't be seen as something the accountant does there and so on. It should be the founder should be really involved in it, understand your numbers. You don't necessarily have to be an IFRS expert, but you can understand what these numbers actually telling you in a commercial sense. And you know, are you managing your working capital? Do you have the management reports to be able to know what's going on in your business? Do you have cash flow forecasts? Or do you have a trusted person who can do that for you and you can track what's going on? And then talent retention. Are you building a team that can grow the business without you? If your people are happy and people, what I've seen as well, in my being an investor, but also being on the other side, working with working as an executive, is if people feel if they buy into the vision, right? You don't necessarily have to be the best payer in town, right? You can be reasonably competitive, but they have a stake in this business. If it does really well, they're gonna also make some money out of it. And you're treating them well, you're developing them. They feel that can't get the same experience maybe at a big corporate where they get it in your business. You will have a lot of loyal people that will go through, walk through the fire for you and so on. So being clear on your talent is very important and the people that you have in the team. And then finally, is just, kind of a question from my side is, just to tell you that if you found benefit in this information, just 1 second. This is the final slide. So what I offer is my focus at the moment is on working with founders. I've got a founder accelerator coaching program, and this is a cross-cutting founder. Some of them are still early stage, some might be a little bit larger, some approaching medium-sized companies and so on. So so it's a broad brush of entrepreneurs, and the idea is to help them grow their businesses, build clarity, work with the founders, help them reduce founder dependency. So I've got a group program, small group program that's delivered online. Then I also have a one-on-one coaching offering that is a structured, program over a number of weeks, also delivered online. A lot of the content that I've shared here informs how I think about coaching. My view is coaching can mean many different things to many different people. And in my view, it should be outcomes based. It should be commercial. It should be aligned to your business. Yes, there's the people element, the personal element of it, how you show up in the world, how you operate as a leader. But if a coach can't help you get real returns in terms of business growth, profitability, personal growth, leadership growth, then it becomes a nice to have. So it has to be aligned to getting your real business outcomes. And that's what I try to do with the one-on-one founder coaching. That is bespoke. So for people who don't want to be in a group, this is one-on-one coaching, which is obviously a more premium offering. And then the advisory and consulting, you would have seen I spoke a lot about strategy, about private equity, about capital raising. That's my background. And I can also help with helping you formulate your strategic plan, helping you review your existing strategy, helping you with debt and equity capital raising for your business. And also, if you want to buy another company or you've already got a business and you want to sell it to maybe private equity or another trade buyer, I also have the background to help you with that. So that is my story, Mr. Lewis. I hope you and the team found value in that. It certainly was a big pleasure for me to be here with you this morning.